Hi traders, let me ask you something. Do you want to know the secret behind why most traders lose money and how you can turn their losses into your profits? This isn't about fancy indicators or overcomplicated strategies. This is about understanding the raw mechanics of the market, how liquidity works and how to exploit it. If you don't get this, you will never truly master trading. Stick with me till the end of this video and I will show you how to profit from the liquidation of other traders. Let's dive in. Look at this chart. Here is a horizontal level, a key price point where buyers and sellers have been battling. When the price breaks through this level, what happens? Boom! A massive impulsive move. Why? Because behind this level there is a pool of liquidity, stop losses and pending orders just waiting to get triggered. When the price hits them, it creates a domino effect and the market explodes in one direction. Now here is the $1 million question. How to catch these movements consistently? The answer lies in understanding liquidity and market structure. Let me break it down for you. By the way guys, I know this trading terminal might seem overwhelming at first, but it doesn't have to be. If you're looking to master strategies like trading smart zones, order book scalping or spotting institutional level setups, I've created a free course to help you get started. It's available on my Telegram channel. My goal is to simplify trading and help you trading with confidence. If you are interested, feel free to join and grab it absolutely for free. In this course, I will show you how to install and use such a terminal, how to use order book or market depth analysis to understand the market and see the big players' moves. The only way to trade effectively is to hide behind huge capitals and trade with them, but not against. This course will guide you to understand and use this principle correctly. Now we move forward. Liquidity is the lifeblood of the market. It's made up of two things: pending orders, buyers and sellers waiting at specific price levels, and stop losses, orders placed by traders to limit their losses. When the market accumulates near a key level, it's like a spring being compressed. Liquidity is the pool of buy and sell orders in the market, including stop losses. Here is the key. A seller's stop losses is a buy order and a buyer's stop losses is a sell order. When the price hits a key level, this stops triggered, creating a domino effect. For example, if price breaks support, seller's stop losses or buy orders activated, pushing price up. Similarly, breaking resistance triggers buyer's stop losses or sell orders, driving price down. This mass execution of orders accelerates price movement. Whether it's stop losses or forced liquidations, the effect is the same: a surge in market orders that fuels momentum. By identifying where these liquidity pools are, you can anticipate and profit from these explosive moves. The moment the price breaks through, it triggers a cascade of stop losses and market orders, creating a massive move. This is why breakouts are so powerful. They are fueled by the liquidation of other traders. But here is the key. You don't need to predict the direction. You just need to identify where the liquidity is and position yourself to ride the wave when it breaks. To find these zones, focus on three things. First, active coins. Look for assets with high trading volume and volatility. Second, accumulation zones, areas where the price has been consolidating, creating a build-up of orders above or below the level. Third, increased volume and volatility. These are signs that the market is preparing for a big move. For example, if you see coin trading in a tight range with increasing volume, chances are there is a liquidity bull building up. When the price breaks out, it's a game time. Now let's get into practice. Let me walk you through a real example. Here is a chart of SKL USDT. Notice the horizontal level. The price has been consolidating below it, building up liquidity. Many traders believe in pullback. First, Entry. I place a buy order just at the level, anticipating a breakout. Stop loss. I set it below the local minimum just to minimize risks, in case the breakout fails and short players win. And finally, take profit is open. I will just fix manually by small parts. As you see, when the price breaks the level, it triggers a wave of buy orders and sweeps the liquidity above. The result? A really quick and really profitable move. This is how you trade with the market, not against it. By the way, guys, in my Telegram channel I share every setup I trade in real time. You can follow along and replicate my trades, and by watching my videos you will learn exactly how to execute them. Plus, you will get access to entry points for various projects, my trading results, market analysis and the latest news. Subscribe now and take your trading to the next level. The link is already in the description. Alright traders, let's call it a day. Remember, trading isn't about guessing or relying on indicators. It's about understanding the market mechanics and using them to your advantage. Liquidity hunting is one of the most powerful strategies out there, and now you know how it works. So what are you waiting for? Head over to my Telegram channel, grab your free course and start applying these strategies today. Let's turn those losses into profits together. Thank you for watching and I'll see you in the next video. Trade smart.